48-year career, there has never been a time like we've experienced over the course of the last 11 months. And particularly what's interesting in these slides is for board members who have been with you for some time, they need to be both educated and updated as to the complexity with which you are faced each and every day. And as we've gone through 3 iterations of federal stimulus, soon to be a 4th, provider relief funds from Health and Human Services, FEMA applications, etc. We were just discussing here before we went on that while we've been referring to the challenge of how to figure out the double dip, it actually should be referred to as the quintuple dip, since there are some clients who have been able to obtain funds from 5 sources and need to make sure that they're not paying for the same cost from 2 of them. So it is a very, very complicated period of time. This is on top of the daily operational challenges that you face with the pandemic and having to make sure that you are keeping your staff and the individuals you serve as safe as possible. This particular slide, I'm not going to read it to you, but again, just be aware that, as is true with all of our presentations, you should consult with your outside advisors, and you cannot take this presentation as the gospel, because the gospel in this case changes from day to day. Next slide. So the saga continues. We thought that by today we'd have a much clearer picture on the $1.9 trillion Biden rescue plan, but as of last night, there appears to be a move forward on the part of the Democrats to move this proposal forward as it's written in a budget reconciliation model. Now, that does not mean they're going to get all $1.9 trillion, but it does mean that they're going to be able to get something passed without Republican support. So we would expect that that will happen sometime between now and the end of February. We have our next webinar for the statewide practice available on March 12th, Friday, March 12th, and we're hoping that by that time we can give a more detailed summary not only of the Biden rescue plan, but where we are with respect to the various funding sources and the issues that you face in wrapping up your year-end audits as well as your consolidated fiscal report. We are in a much better position today than we were prior to the election on November 3rd. We have Senator Schumer as the majority leader. We have a split Senate, but decided by Kamala Harris as vice president for tie votes. And we have a 11 or 12 vote majority in the House with resting with the Democrats. I should say resting with the Democrats. We understand that you've been through a number of our presentations this week and over the course of the last 6 months. And this session is actually going to just be an hour as opposed to 2 or 3 hours. So you'll have an opportunity to obviously ask questions through the chat function. And as you see there, we had originally planned to go to March 5th. Given the uncertainty of the Biden plan, we're moving March 5th, most likely to March 12th. You should get an invite next week. If you don't give anything to your management team and your board, now this looks like a busy slide, but it is in one fell swoop, if you will, or one page, a very, very comprehensive summary of the complexity that I referred to just a minute ago. If you don't want to give the whole slide deck out, piecemeal it in whatever way you'd like, but make sure you include this slide. And I would also say that it requires some explanation, as I'm going to provide you here in the next 55 minutes. So I would strongly suggest that the CFO and the CEO and any other members of senior management, as it relates to educating the board, it's very important that they understand that this complexity not only applies to you as a provider, but to anybody that you have as your independent auditors. One of the things that we are preparing, which I think needs to be discussed with each and every audit committee this year for calendar year ends of December 31 and also for subsequent year ends of March 31 or June 30th, we are preparing a template that attempts to give some clarity to how your organization handle these various stimulus or support activities from a revenue recognition standpoint. One, was it revenue? Two, did we defer it and record it as a deferred revenue or deferred liability? Where are we with respect to our PPP loans? It goes on and on. And again, I want to make sure that boards, particularly the audit committees, I'm not sure that you could explain this that well in a board meeting, but audit committees need to be very clear as to what you've done in calendar 20 versus what you plan to do in 21. And also, that template that we're putting together is going to have a section on unknowns. I don't expect you to know by the time your audit is done what Governor Cuomo and the federal government might have determined with respect to the double dip, the quintuple dip, whatever we want to call it, as to are there going to be, if you will, clawbacks from the state with respect to taking advantage of federal stimulus that you've been provided, or do we have risks with respect to clawbacks from the federal government for items that we did not comply with from the standpoint of the underlying regulations? And I think this slide does an excellent job of portraying just how difficult it will be for not only you to understand the complexity, your auditors need to be fully aware of the various iterations that are in play here and the unknowns as opposed to the knowns. So there are plenty of questions to be asked. You may not ask them all in the next 50 minutes, but if you do have any questions, you certainly can provide them to us, again, in the chat function or after you've listened to the presentation or after you've reviewed the slide deck. We do have, for purposes of those of you that want CPE for continuing professional education credit, we're going to have the first polling question. There will be a total of 4, I believe, in the hour that we're on. And I will continue once the polling question is read. I will continue on with the presentation to make sure that we are, in fact, keeping on pace with the 1 hour that's been allotted. Mike? So the polling question is, have you received your first COVID-19 vaccination shot? Obviously, there are no right or wrong answers to these polling questions. They are for purposes of CPE. Mike will keep that open for the better part of a minute or so. Looks like a minute, a little over a minute. Again, those of you that might have just logged on and you want CPE, it's very important that you answer each of these 4 polling questions. So, in addition to the questions that you all have, we have summarized the questions that we believe are most significant for providers, management team, board leadership, etc., to be aware of, some of which have been answered, some of which have not been answered, some of which may not be answered for the better part of years if we do end up in some form of litigation between providers in the state of New York and the federal government. We've got plenty of issues that are not going to be resolved necessarily before you complete your year-end December 31, 20 audit. So at the New York State level, we've got a fair amount of confusion. I do not have a direct line to Governor Cuomo or anybody in the governor's office. He said on December 16th that he was not going to put forth a budget proposal until he knew whether or not he was going to get his $15 billion from the next round of federal stimulus. He does not know that at this point, and yet he did, as you all know, release an executive budget, a quasi-executive budget, for the next fiscal year ending March 31 of 22. And there is no question, as was true with this past year's budget, that Governor Cuomo is going to have significant control to modify the budget throughout the year, but the majority of the modifications are going to be made between now and March 31. That's the date that the state has established as the target for implementing the budget before the new budget year starts on April 1. And what's been made more confusing in the last 2 weeks is that Comptroller DiNapoli has reported, I believe through the magic of cash basis accounting, that the tax receipts have been greater than what was expected in the budget in 2020. Hard for me to believe that, but that's what has been said. And because of deferrals that can be occurring at the end of March, where we don't pay a Medicaid cycle or we don't pay certain payments that are due as of the end of March, that essentially every dollar that gets pushed into April gets pushed into the next budget year, but can be reflected as a cash basis surplus in the current year. So the $15 billion question is without question the most significant that needs to be answered. As of last night, again, the third bullet here, while they are proceeding forward, the Dems, with proceeding through budget reconciliation, there is a strong belief that the $350 billion that has been allocated for states, counties, and local municipalities will not survive even the budget reconciliation process. There will need to be some form of negotiations at the committee levels between the House and the Senate, and it appears as though that is, if you will, the major issue for the Republicans to adjust. They seem to have agreed tentatively on $1,400 of additional payments to reduce number of Americans, but this $350 billion out of the $1.9 trillion is certainly a significant item. We thought after Biden made his presentation a couple of weeks, or in early January, that this $15 federal minimum wage was going to have some legs. It looks like right now that might have been proposed as a throwaway, since we were going from $7.25 to $15 all in one fell swoop. I'm hoping, since New York State City is already at 15, most of the state is at 12.50 or more, heading towards 15. I don't know that it really has a major impact on New York State necessarily, providers, but having been talking with providers throughout the last 11 months, the workforce crisis continues, since many of the competing organizations that are recruiting the same individuals that you are for direct service positions or lesser, lower than, if you will, management supervisory positions are starting at or above that $15 level already. Next slide. So you know that President Trump signed the $900 billion COVID package again. If we do 1.9 plus the 900, you get pretty close back to the CARES Act that was passed last March at $3 trillion. There's a lot of double ups in these bills, so it's not really a true $6 trillion if everything gets passed, because some of it did not get used in the first or second round. But it is going to be clear that that $900 billion, which Trump did sign on December 27th, will be a factor in how much of the $1.9 trillion is going to be able to be enacted between now and my prediction is somewhere between February 28th and March 15th, we'll have some degree of clarity. Obviously, the Trump impeachment trial that's scheduled to start next Tuesday is a big unknown as to how that's going to distract everybody in the Congress, but particularly in the Senate. I believe you've heard in earlier presentations this week that one of the provisions of the $900 billion COVID bill that Trump signed is expanded ability for providers to utilize the employee retention credit. And we believe that could be a significant opportunity for many of you. As you've heard from others, it's very, very complicated to try and determine your eligibility, but it also is something that allows PPP providers who received a PPP in 2020 to potentially be retroactively eligible for the employee retention credit as well. So again, adding additional complexity to an already very complex situation. Mentioned the situation in the House and the Senate. The bottom line is that New York State should be much better off today than we were on January 4th. However, I will also say that Governor Cuomo continues to be quite concerned about the economic situation here in New York, and is still, I believe, looking for substantial federal support in the order of magnitude of $15 billion. His original request, you'll recall, was $20 billion a year for 3 years, or $60 billion in total. This slide presents a number of different links for you with respect to organizations, some of whom are your own provider associations, that can provide you with additional information, updated very frequently. And obviously, there are many, many more websites that can be accessed in addition to Bonadio.com. So the key provisions of Governor Cuomo's budget, and what I am projecting to you, and I'm going to say it here and I'm going to say it again at the end, in addition to your education of your board and board leadership, it's quite clear that this pandemic has accelerated, but also deferred, because of stimulus, the need for smaller nonprofit organizations, those that are in fiscal distress, those that cannot maintain the technology, the leadership, management leadership, and the financial wherewithal to maintain their autonomy. I believe that depending upon the length of the pandemic, we're looking at what I thought was going to be a flood of mergers and affiliations in the first half of 2022 that appears to now be deferred as a result of PPP, ERC, and other stimulus to at least the second half of this year. Although I will say we at Bonadio across the state have seen a pickup during the last several months and into the first quarter of 2022. And we believe those organizations are being wise in that if you think you're in a position of having a cash flow difficulty in the second half of 2022, now is the time to be looking for an affiliation partner. And the vast majority of the folks we're working with right now have made that conclusion that either at the end of 22 or into 23, at the end of 22, at the end of 21 into 22, getting messed up with the fiscal 22 budget, at the end of 21 and into 22, that if there is an issue with respect to cash flow and the ability to provide services in accordance with regulatory requirements, the first 6 months of this year is certainly not a bad time to be discussing the opportunity for affiliations. I know that hits many of you very hard, and it also is not something I say without a fair amount of compassion and empathy. Everybody wants to maintain their autonomy until, if you will, the bitter end. And this particular situation we find ourselves in requires, in my opinion, that the strategic plan of the organization, whenever it was last updated, unless it was done in the fourth quarter of 2020, every strategic plan needs to be revisited in 2021 and addressing not only that issue of merger affiliation, but also addressing the issues associated with how do we continue to maintain our autonomy on a going forward basis if that's the path that board and management want to continue or want to pursue. In the budget, you can read these items. I'm not going to read them to you in the interest of time, but the main one is the fifth bullet there, the 1% across the board ATB, across the board cut in Medicaid payments effective July 1. Now, this is really something that's up in the air with respect to the matters that I've already discussed, additional federal stimulus, where we end up for 2021's fiscal year, et cetera. So we do say here it could be 2%. It might get eliminated depending upon what takes place in the budget negotiations over the course of the next roughly 2 months. Go back one. I am a little bit concerned that the second to last bullet, the no Medicaid trend factor on fee-for-service Medicaid through March 31 of 23, that sends a message that's pretty loud and clear for what you can predict in terms of your cash flow from program services on a going forward basis. So as I have said, and I think I say later in the slides, We are having a permanent decline in government funding for certain services, not all, but for certain services. I think the exceptions are going to be opioid, drugs, alcohol, gambling. But on the side of traditional fee-for-service, whether it's been converted to managed care or not, I believe that the pressure will be on to keep the level of increases as low as possible, and certainly no trend factor, which the state equates to an inflation factor, in a period where we are increasing the minimum wage to $15 upstate. All of that has to be factored into your strategy and your cash flow projections for 2021 and 2023. Next slide. So the 1115 waiver, and this is a significant plus. I'm often known for being a little bit of a Debbie Downer or Daniel Downer, as the case may be. But this one, I think, offers some significant opportunity that obviously we had our DSRIP extension declined by the Trump administration in February of last year. There's now a provision here under the 1115 Medicaid waiver that Governor Cuomo is going to request an extension. Whether it's a 3-year extension or 1 year renewed each year, it definitely provides additional window opportunity for more funds to come through this 1115 waiver than from our traditional fee-for-service structure or managed care structure that you find yourself in today. That will then allow you, if the budget does get passed and we do get that federal stimulus, to reconnect, if you need to reconnect, with your performing provider systems, some of which have transitioned out or are in the process of transitioning out. So how that structure and how that money is going to flow going forward is still unclear. However, they've hit the nail on the head with the 4th bullet: value-based payment, telehealth, workforce, health equity, support for social determinant of health providers. Those of you that are SDOH providers, I think generally the majority view your participation and support in the first round of DSRIP to have been secondary, certainly in dollars, to the amount of monies that were invested in the healthcare delivery systems, primarily the health systems. That vital access providers, really for nursing homes and home care, but still an avenue that might be available to some of you on the phone. That $132 million in funding is being reinstated, if you will, and that's obviously for distressed situations and has been in place off and on for the better part of 5 to 6 years now. And then this statewide healthcare facility transformation program, again, this is more of a grants and awards, was reauthorized for $425 million. Much of what's on that page, I think, is going to be dependent on the final budget that's approved. Next slide. With respect to the dormitory authority, just be aware that access to capital financing at the rates that are currently in effect is still far more plentiful than what you can get in traditional operational financing in terms of lines of credit, working capital financing, etc. So we are going to have a little bit of a dichotomy here over the remainder of this year and into 2022. That is, I think you will be able to access capital, but whether or not you'll be able to actually start a financially feasible program in that capital facility will be more of the challenge than getting the capital financing. There's a number of other provisions here that you can see. I do think that the 4th bullet, again, you can tell they're on the right track. It's a matter of, can we assure ourselves that there's enough money there to be able to support what the needs are. And this one, with respect to telehealth services, I've said before, I'll say again, the economists in the New York State, several of them have said that the pandemic accelerated the implementation of telehealth and telemedicine by a period of 10 years. So those of you that are strapped for cash, don't have access to being able to upgrade sophistication of telehealth, telecommunications, etc., that's another element of your strategic plan that needs to be candidly and thoroughly address. I cannot believe they reduced the workforce recruitment and retention funding by $45 million, but I believe that that's a function of the fact that we have gotten so much stimulus funding in various capacities from the federal government. Mandatory paid leave of 4 hours, 2 hours each for each vaccination dose. Again, I put that on there because that's just another one of those unfunded mandates that you all are subjected to on a fairly regular basis that no one seems to want to quantify or acknowledge in terms of the government that puts those mandates in place. And then we obviously need a fair amount of nursing support. And again, the message here, and this is true for your strategic plan, 10,000 people a day on average for the next 8 to 10 years in the U.S. are going to retire every day, 10,000 baby boomers, of which I am a proud member. 10,000 a day, 300,000 a month on average. We do not have the numbers of individuals to replace those positions that will create additional pressure above and beyond the workforce crisis that we have had for the last 5 years. And the workforce crisis will no longer be necessarily limited to direct service employees, but it will be felt within the management and leadership ranks as well. Next slide. So in the managed long-term care area, some of you on the phone know more about this than I do. It's suffice it to say that the MLTC provisions for residents of nursing homes substantially changed in August and November of last year, where if an individual is in a nursing home and deemed to be at their final resting place, many of them were disenrolled as of August 1st or November 1st last year. I think that's instructive for some of the other, particularly the DD sector in their residential arena, where many of the individuals have been living in those residences for most of their lives, if not decades. And I believe the Department of Health concluded that the ability to truly, quote-unquote, manage care in long-term facility environments was not something that was yielding the intended benefits of putting those individuals into a managed care program. The managed care premiums were retroactively adjusted. That's because the second quarter into the first to second quarter, March through June of last year, when the pandemic was raging forward, there was a significant reduction in claims utilization by the traditional population in need of health care, shutting down elective surgeries, et cetera, et cetera. So, as you see there are pluses and minuses, some of them somehow or some way directly impacted by the stimulus that's been received over the course of the last 10 or 11 months. And there are many additional provisions that will affect provider funding, and that's why we provide you with those web links, and certainly encourage you to work with your outside advisors on these very, very complicated decisions. And the other reason I want you to educate your board is I do believe there's going to be a lot of Monday morning quarterbacking going on at the end of 22 or at the end of the pandemic, end of 21 or at the end of the pandemic in 22. That Monday morning quarterbacking being, well, why didn't you do this? Why didn't you tell us that? Well, what is it? Why are we hearing about this now? Why didn't we hear about it a year ago? So the challenge for management is clearly educate that board leadership, if not the full board, to both inform them, but also to make sure that there's proper and timely communication between management and the board. It's never, ever been more important than it is in this environment that we find ourselves in. Next slide. Polling question number 2. How many virtual calls or conference rooms have you participated in since February 1st? None, less than 10, more than 10, so many that you stopped counting. I forgot that. I think I might have put that question together myself, laughing at my own joke. I'll continue on. Again, if you want CPE credit, you need to answer that question. You need to click submit. you should get a check mark on your screen saying that your answer has been submitted. Again, moving forward, that was kind of a reflection of where we are today with respect to Biden, federal stimulus, New York State budget. The other areas that are listed on this slide, I think, are extremely important on a prospective basis that, again, need to be considered in your, not only in your strategic plan, but your cash flows on a going forward basis. Many of you have experienced increased OMIG recoupment activities and audit activities. We expect that to continue. They've been relatively calm over the course of the first 10 to 11 months of the pandemic, but there's no question that Governor Cuomo knows that there's Medicaid fraud and abuse, in addition to technical violations, which are the vast majority of the recoupments in the nonprofit sector are technical regulatory violations, but not fraud and abuse, but nonetheless labeled that way. And I believe the budget will have something in the neighborhood of single or double-digit billions of dollars for OMIG to try and recoup over this next fiscal year for March 31 of 22. We saw a glimpse of this with what are called Oprah audits being performed on a pilot basis for 32 mental health providers. And the results of those, for those of you that have been impacted by them, have been dramatic on the negative side of the equation. Much of the recoupments involving a technical violation in terms of how a claim was completed and submitted has nothing to do with whether or not the service was provided, but was it completed and supported with adequate documentation in accordance with the regulation. There's a whole separate deep dive on that one that we won't get into, but just be aware that if you are a mental health provider, it's likely that without legislative intervention, this particular matter will end up in litigation between providers, provider associations, and the state of New York. The IDD implementation of managed care is continuing along a question mark. The CCOs received a dramatic decrease in their rates of payment. I believe the walking around number is 23%. I don't know if that's true across the board or not. But a 23% reduction. As you know, for the first 2 years of CCO existence, the federal government paid 90% of match, 10% from the state in order to transition case management and care coordination over to the CCOs. It looks right now with, again, a very muddy crystal ball. We could be in voluntary enrollment in 2022. My personal opinion is that as we are hearing about the pandemic and the various mutations, it's more likely that that gets shifted into either late 22 or 23, and then mandatory enrollment to follow. Now, the big question there is what is going to be included in the managed care benefit package that is turned over to the CCOs and their managed care partners. That's still a big unknown as to whether it's going to be medical care, hospital, physicians, and facility clinic costs, or whether it's going to be the whole ball of wax, including long-term care supports and services, residential services, day services, etc. So, again, we've been talking about that. I go back long enough to have talked about that in the early 90s. We've been talking about it this century since 2008. So don't expect any big-time clarity anytime soon, certainly not until the budget is finalized and negotiated. That will probably be a turning point in terms of having some more direction on the IDD population. We have said in the past, we continue to believe that recreational marijuana, now authorized in 16 states, I believe 27 states have medical marijuana, and the taxes on converting to recreational marijuana will certainly help the revenue side of the equation for New York State. And for those of you that didn't see, because you're busy with many other things, the state of Oregon just announced this week that they are trying to completely decriminalize marijuana and drugs from their criminal justice system. essentially the plan for Oregon. Now remember, Oregon was the first to go with death with dignity. They are going to be the first to go with decriminalization of drugs, and everyone is going to be referred into the behavioral health arena or the appropriate provider for what their needs are. But again, if you think about that, now I'm not suggesting that Oregon's initiative is going to flip over to New York in a matter of years or perhaps decades, but that is something to consider for behavioral health providers on the plus side of the equation, that many of the individuals that are now not currently being served adequately, that they're incarcerated or in some form of detention, that the demand side for behavioral health, I believe, is going to explode far above where we are right now with the mental health and drug abuse situations that have occurred as a result of the pandemic. So on the behavioral health side, it appears that demand will be increasing significantly. Whether we have the sufficient resources to be able to meet that demand is going to be a big unknown. We got budget hearings that were scheduled for earlier this week. They will continue as we go through the month of February and March, and be aware that advocacy and participation, obviously, as you can, in that budget negotiation process is extremely important. Next slide. Okay, as it relates to the Biden proposal, I'm going to go through these relatively quickly so that we can get to some questions. Let me ask Mike, do we have questions yet or not? Okay. All right, so we've got a couple of questions, but if you have more, please provide them. This again reiterates, and as I said at the outset of the presentation, this slide deck should be given to your board members. They are definitely not in the same frame of reference, most of them, from you as management team members, and for them to see very clearly just what I've referred to as the level of complexity that exists today is important for, one, gaining their support. Two, we need more philanthropic support from not only board members, but from the wealthy or upper middle income populations in the country. Mackenzie Bezos, who divorced Jeff Bezos, who just stepped down as CEO of Amazon, she got $38 billion in the divorce settlement. Never met her, but I love the lady already. She put $20 billion roughly into the foundation, and in the last 5 months, she's distributed $4.2 billion to charitable organizations, including $25 million to the United Way here in Rochester. So the amount of funding to offset government declines has to come from private sector foundations, grants, et cetera, and it is in your strategic plan. If you do not have a grant writer or cannot afford a grant writer, you need to have a relationship with a grant writer that has proven success in dealing with many of these foundations and private sector family foundations that have really had an explosion in their wealth through their investment portfolios, with the markets currently at all-time highs. Next one. So I've talked about each one of these things already. I will just say that the stimulus of $1,400 a week, $1,400 an individual, I'm looking at unemployment now. So $1,400 a week, this is something that is potentially going to be extended through September 30th, and there's also included a $15 billion grant for small businesses. The $1,400 that I was referring to earlier, just to clarify, that's where Biden seems to be today, with $600 being authorized in the Trump legislation of December, $1,400 for this next round in the Biden bill, for a total of $2,000, which is what was originally passed by the House. Next slide. I cannot emphasize enough, state of nonprofits. Talked about telehealth and telemedicine. I think we had, I attended it, so I know we had a presentation on cybersecurity and information technology. I believe it was yesterday or the day before. And there is no question that from an audit risk and a management risk perspective, cybersecurity, if it hasn't been, should be in your top 3 risk areas from the standpoint of financial reporting, management issues, etc. I believe for many health and human service providers, regulatory compliance should be also in the top 3. And the third one that has to be in all of them is maintaining a solid internal control environment, particularly in a remote working environment where you have disrupted many of your normal daily and weekly and monthly internal control procedures. And certainly in the midst of a pandemic, there will be certain employees, given pressures that they might have as a result of the pandemic, that are going to want to take advantage of what I consider to be vulnerability from the perspective of your normal, strong internal control environments. The school information I'm going to pass over because we have a separate session on that. Next slide. Again, here's the $1,400 direct financial assistance to individuals, supplemental unemployment compensation, and extension to eligibility. In this case, adding $400 a weekly supplemental to cover expenses of individuals who are on unemployment. And, Biden is somebody that is also more in favor of regulation than the previous administration. So there are new OSHA standards that are covering a broader swath of employees than those that were originally covered under OSHA. Next slide. So we talked about the congressional situation between the House and the Senate. I do believe that it is, as Governor Cuomo said, he said, I'm not going to put a budget together in January, even though he did when he said it in December. I don't think it's really that productive to try and put together a budget for calendar 2021 until you probably get to the end of the first quarter. Now, that does not mean, it does mean that you could roll over your budget projections from the fourth quarter of 2020. It could also mean that you adopt a budget for 2021 that continues the budget as it is with what you know to be supplemental stimulus that you will be able to receive. But more than likely, what you're doing on the stimulus side and what we're doing on the governor budget side until March 31 or soon thereafter, those decisions relative to budget assumptions are going to be more of a guesstimate than they are a reliable budget assumption. So again, you have many, many other higher priorities on your list. I'm sure I'm going to incur the wrath of some of my partners by downplaying the need for a formal budget adoption in January or February of 2021. But the fact of the matter is the board, if they are properly informed as to what the unknowns are, I believe that there is, if you will, substantial merit in rolling over what you experienced in the fourth quarter into the first quarter, and then hoping that we have more clarity from a budget standpoint and a pandemic standpoint come April 1, when the budget could then be revised and finalized. Next one. Polling question number 3. From the news media outlets that you rely on, did Punxsutawney Phil see his shadow? Yes, no, don't have a clue, and I don't care. Again, if you want CPE credit, we want you to answer that question and submit your answer. And I'm going to talk again about what we've just renamed the double dip as the quintuple dip, because there are that many different funding sources that could end up paying for, as the first bullet indicates, $1 of expenditure by you can only be supported by $1 of revenue from a single source. Now, whether or not that survives the next 12 months, I think it will. But as I have said previously, I believe with all of the various complexity associated outside of PPP, associated with provider relief funds, other forms of stimulus that have been provided to tax-exempt providers, that with the governor wanting to do clawbacks, and with the federal government perhaps not wanting him to do clawbacks, we might end up with some form of a negotiated settlement along the lines of the federal matching percentage for Medicaid. You know, the state pays 57 cents of every Medicaid dollar. I'm sorry, the feds pay 57 cents of every Medicaid dollar in New York. State pays 41. We may find ourselves in a negotiated settlement, which would be wonderful for all of you, as long as the percentage is not too high. You get your PPP forgiveness as close to 100% as possible. Everything else gets reported on your cost reports so that they can be aggregated. State of New York would know the total amount of federal stimulus received by all providers outside of PPP, and let's just say the number is $22 billion. Rather than try to adjudicate the thousands of providers that received that $22 billion, federal and state government, being both Democratic, would negotiate that of the $22 billion that has been received by providers, they need to, if you will, give back, let me be optimistic here, 3% of the $22 billion, and they can retain everything else. And, oh, by the way, the cost reports for 2020 and 21 are not going to be used for purposes of reducing rates as they might otherwise have been in the normal rate methodology cycles for SED, DD, and other funding sources. Again, the second half of this slide, what I just said to you is pure educated speculation on my part. I want that to be recognized in the recording of this. But if you want to look at a reasonable path forward that does not create mega fees for attorneys and accountants over the course of the next 3 to 5 years, somebody should apply some logic to a negotiated settlement in order to, one, provide clarity as to where you are, and two, what is in fact eligible. PPP is an interesting point that could be expanded upon with respect to PRF, and that's where PRF is right now, the Provider Relief Fund. You're supposed to be able to justify how much you got with how much you spent, and that might be something that could be carved out. So there's an opportunity here for a multi-layered settlement that would say, let's take the big pieces of stimulus that were received. PPP has its own process for forgiveness. Let's take PRF. Let's take ERC. Let's take some of the other big ones that have been put forth, and let's see if there can't be some form of universal type settlement that could be decided upon from a methodology perspective, rather than everybody having to argue their individual position. Obviously, there will still be individual circumstances that will need to be argued, but it is impossible for the state to adjudicate every provider, not only current rates, current level of stimulus funding, and future rates. We will come to a standstill in many cases in terms of being able to do anything to try and predict revenue on a going forward basis for services that most tax-exempt organizations provide. Next slide. So, in addition to what I just described, we are now referring to PPP1 as the original PPP or PPP1. That's the one that was created through the CARES Act last March and then was amended, if you will, through the PPP Flexibility Act. HHS is the provider relief funds, and I believe they're moving now from phase 3 to phase 4. Margaret Lally in our office, I'll give her a shout out, is the person that, in my opinion, is just incredibly supportive and helpful in that particular area if you have questions. PPP2, as you know, has been restricted in several ways in terms of number of employees being lowered and more, if you will, hoops or hurdles to overcome to be able to acquire, I believe the maximum loan in PPP2 is $2 million, as opposed to the earlier version. And I will say to you that there have been approximately, I believe, 150 arrests of organizations receiving PPP1. 65 of them have resulted in incarceration. I don't believe any of them have been alleged against a nonprofit organization in New York. I can't speak for the rest of the country, but we have tried to do the right thing, and I think that's one of the messages from this particular seminar. Try to do the right thing based on what you know as being the facts at the time you're making a decision. But this instance of double dip to quintuple dip is something that is going to need to be considered for months to come. Go ahead. Okay, so again, just to reiterate my earlier comments, this slide summarizes it again for board digestion versus my verbal announcement of what I think is going to happen. But I do believe that the providers are being put in a very difficult position with respect to your relationship with New York State funding sources in relationship to the federal COVID relief opportunities. And this threat, if you will, or expectation or supposition, I don't know what to call it, if in fact we get money and we report it as revenue in 2020 or 21, does that then become an automatic reduction in our rates for future years? The one that's most unknown at this point right now is the SED sector, State Education Department. We do believe that there is going to be clarity coming, but it's going to have to be after the budget is adopted for next fiscal year. Right now, I think no one is willing to step into a position of giving a definitive answer to how these complexities are going to be resolved. Next. Okay, again, for the benefit of your board and your management team, the key element on this particular slide is the bolded item. The timing of when and what costs are eligible is crucial. Again, I'll give the shout out to outside counsel as well as internal experts that may have been monitoring these depending upon the size of your organization. But each of these bullets do offer potential for further stimulus opportunities in 2021 or retroactive to 2020 that you may not have been originally available to you. And I think more to come when the Biden bill is passed as well. Next slide. So this one is really, again, for purposes of your board. Somebody's going to ask you this question at the top. Why are you going through all this effort? There are opportunities here to stabilize your organization in a very difficult 11-month or what might ultimately be an 18-month period of the pandemic. And you want to make sure that on a timely basis, I don't know if it's on one of my slides, but documentation. You cannot go back at the end of the year and try and recreate all the documentation that's occurred since March 12th. So if you do not have contemporaneous documentation for 2020, you need to develop a file of support, and then you need to implement contemporaneous documentation starting February 4th, 2021 on a going forward basis. Next one. So don't give up. Fatigue is definitely out there. There's no question about it. And many of the responses you get, which are non-responses, make it even more stressful on your organization. But be aware that there is a significant opportunity here for you to maneuver your way through this, really it's like a corn maze of stimulus and state funding, and it is something that I do believe offers significant potential to the provider to end up in a better place than you would if you do not expend the effort necessary. Polling question number 4. Are you or your family traveling during the February President's Week break? Yes, no? Haven't left my house since last year. Okay, let me wrap it up here. I got exactly 3 minutes. Can you just run through the next couple of slides? I want to get to the questions if we can. Oh, that is it. All right. 3 minutes. Mike Vollmer is going to ask me a question, so if you hear a strange voice.
Jerry, this isn't going to take long. It's an all-time low. It is 2, and neither one of them are overly complicated. So the first is the $15 minimum wage. I believe that's going to be phased in over several years, right?
Yes, it's already effective for New York City Metro. Depending upon what region of the state you're in, it's being staged right now to get to $15. I believe it's over the next 3 years at this point. I think it was a 5-year program. But having said that, we all know that the fast food restaurants and the folks that are hiring people at minimum wage, most of them are either at 15 or approaching 15 already. So it is putting pressure on providers far more quickly than what I think it should, and I think it was far more quickly than what Governor Cuomo might have expected.
The other one I actually don't mind answering quickly for you is...
Please, take off the mask first.
Should the FEMA funds be included in our chart? I will admit that chart is not 100% comprehensive. There's probably a couple other things that should be on there as well. And then the follow-up question from this individual is, how do they get slides from the presentations? They've been on a few and haven't gotten them yet. I think a number of the presentations that are happening this week, they may all be going out at one time, probably next week.
Yeah, if you have some kind of emergency situation where you got to have them by the end of day tomorrow, we can certainly give you the slides. But what we were trying to do was give you the slides, the recording, and the answers to the questions all at the same time. So again, if there is an urgent situation, by all means, email us. But it is something that you will and can expect to receive from all of the presentations this week. The intention is for us to get them out as quickly as possible next week. I thank you all for your participation, and again, stay safe and stay healthy out there, and we'll continue to slog through this together to get to the proper end result, hopefully. Thank you very much.